Did you know that every mile you drive for business could put money back in your pocket? Hey taxpayers, it's Tiffany Gonzalez CPA here. And if you're a business owner, a freelancer, or self-employed, tracking miles can save you thousands on your taxes each year, but only if you're doing it correctly. Too many people miss out on this deduction because they either don't track their miles properly or they aren't sure what qualifies. Today, I'm breaking it all down: how to track your business miles, what counts as deductible, and how much money you can save come tax time. So let's get started. The IRS allows you to deduct business-related miles in one of two ways. The standard mileage rate is the first one. The IRS allows about 70 cents per mile for business driving in 2025. The second way is the actual expense method. This lets you deduct fuel, maintenance, insurance costs, depreciation costs, but it does require more documentation. Most small business owners find that the standard mileage rate is easier because you only need to track your miles, not every single car expense. Here's an example. Let's say you drive 10,000 miles for work in a year. At 70 cents a mile, that's about a $7,000 tax deduction, which could save you $1,500 to $2,500 in taxes depending on your tax bracket. That's a huge tax break for simply just tracking what you're already doing, driving for business. So what business miles actually count? Because not every mile you drive qualifies. So here's what types of business miles count. First, it's driving to client meetings or job sites. These are business-related errands, things like going to the bank, going to the post office, picking up supplies, traveling to and from conferences or work-related events, driving between two different business locations. So here's what doesn't count. Commuting from home to your regular office unless you have a home office. Personal errands, side trips, those don't count either. So how exactly do you track your miles? To claim the mileage deduction, you need solid records. Here's the easiest way to track your miles. You'll want to use a mileage tracking app. Apps like Mile IQ, Everlance, QuickBooks Self-Employed. These apps track your miles automatically, which makes tax time much easier for you. You can also keep a mileage log instead. Go manual. If you prefer manual tracking, you can use a simple spreadsheet that has the date of the trip, the start location, the end location, the business purpose of the trip, and the total miles driven in that trip. You want to make sure that you keep receipts for gas, car maintenance. Even if you use the standard mileage rate, you keeping these receipts proves the business use of your car if the IRS ever comes asking. So let's go back to how much you can actually save, right? Because this sounds like a lot of work. If you drive 5,000 business miles, you get a $3,500 deductions, right? 5,000 times 70 cents a mile. If you drive 10,000 miles, that's a $7,000 deduction. And if you're in the 24% tax bracket, that's a tax savings of over $1,600. Free money just for tracking your business miles properly because you're already driving for a business. And if you're not tracking your miles yet, you really are leaving money on the table. So start using that app or log today and make sure you claim every mile you deserve. We hope you enjoyed this video. Don't forget to hit the like button, subscribe to our YouTube channel, and follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next time, your favorite CPA, Tiffany Gonzalez.